When a country produces well, the local market is not enough or sufficient. Or even if it is enough, the prices are not as competitive as the international markets. Producers tend to want to look outside so that smart people ask questions, smart people seek facts, smart people solve problems. Ladies and gentlemen, it is the 6th of February and I am back again on this platform, ready to educate you, ready to inform you, and ready to give you insights into data and information which I think is important and relevant for you. In the wake of what is happening in the country right now, I think all of you know that the Kenya shillings has been depreciating significantly over the last few months. Since June of 2023, it was at around 139 against the dollar, and it is now trading at around 163. I haven't seen our currency depreciate that fast. And there is a deep question that we are definitely asking, what could be happening? What do you guys think is happening? And every person has an opinion. And because we are an army of smart people, we try to get the facts. Now, from my end, before I even venture into what I'm trying to achieve today, changes in inflation, they are affected by a few factors. And if then we look at those factors in Kenya, then we might be able to nail down the specific reason why our Kenya shillings is depreciating. There are two reasons that exchange rates are affected. Reason number one is how are we doing in terms of our domestic output? How are we doing in terms of production? Our industrial sector, our agricultural sector, our manufacturing sector, our trade. How is the production as compared to previously? And of course now as compared to our trading partners who majorly use the dollar. And I'm speaking about now the US. How is our domestic production in comparison to our major trading partners like the US? Have we increased our exports, or are we now importing even more of the US products as compared to a few months ago? And if that is the case, what is causing that? Because what normally causes the exchange rate to adjust is that when you increase your domestic production, you are forced to do something called exporting. When a country produces well, the local market is not enough or sufficient. Or even if it is enough, the prices are not as competitive as the international markets. So traders, they tend to want to look outside so that they can get competitive rates. The people who buy our products will then have to access our Kenya shillings. And for them to access our Kenya shillings, it means we will have to give up some of that Kenya shillings. The demand for our Kenya shillings will significantly cause the value of the Kenya shillings to rise. If then our Kenya shillings value is depreciating, then one of the reasons could be that our domestic production has gone down significantly. And if our domestic production is on a downward trend, who do we blame? Is it the producers? Is it the government? Is there something that the government could do that it is not doing? And why now? Why the last period? Why the last few months? What is that one decision that we have made that is causing this whole mess? The other reason could be our domestic production is increasing. It could be that we are not actually having a downward trend in the domestic production. Domestic production of our trading partners is increasing at a faster rate than what we are experiencing. An example, maybe the US has a higher rate of growth of their domestic production, and their traders and their manufacturers and their producers will want to export to the outside world. And as such, it causes the Kenyans to have to increase their demand on the US products. That will cause our Kenya shillings to be deposited into the foreign exchange market, and that will reduce the value of the Kenya shillings against the dollar. The other reason that could be causing this depreciation of the Kenyan shillings is something called real interest rate. Because an increase in the real interest rates of a country are good for the country, because now it means investors are interested in investing in our country and they will demand our Kenya shillings. That demand for Kenya shillings will increase the value of our Kenya shillings. If our real interest rate is reducing compared to other trading partners or other countries, then the demand for the Kenya shillings will definitely go down. And has that been the case? If we look at the last 6 months, is that the case? Is our real interest rate reducing significantly over that period of time? And if our real interest rate is reducing, why is it reducing in the first place? What is causing it to reduce? It will come back to, of course, the stakeholders of our economy, who we shall look at it and trying to figure out who is causing that to happen. The point of this video is, in light of that, I was looking back into the last report that was given by a Monetary Policy Committee meeting. The last meeting was done in December 6th. The next one is being done in February. For people who don't know what the Monetary Policy Committee does, the policies surrounding the determination of how much money should be operating within the economy, how much money should be circulating, because the amount of money circulating in the economy affects or has an impact on all the factors that we have spoken about. It has an impact on the inflation. It has an impact on the demand. It has an impact on supply of commodities and services. It has an impact on the interest rates. There is a group of people who sit in the Monetary Policy Committee at the Central Bank of Kenya. They observe and they look into the global economy and the Kenyan economy. They try to figure out how the next 3 months are going to look like. So they'll determine something called the central bank rate. The central bank rate, it is the minimum lending rate. No one can lend any amount of money below the CBR rate. What they do, they set that rate with the expectation that the economy will operate where the forces of demand and supply within the economy will interact and they will reach an equilibrium. I want to review the last meeting that they had and to just look at some of the recommendations that they made and some of the points that they picked out of it. So to start us off, they said, this is what they said. That was around December 6th. The exchange rate depreciation continues to exert upward pressure on domestic prices, thereby increasing the cost of living and reducing purchasing power. Of the overall inflation of 6.8% in November, the exchange rate depreciation contributed about 3 percentage points. So guys, they are trying to say the depreciation in the exchange rate of our currency is continuing to have an upward pressure on the domestic prices. How does depreciation of the currency affect the domestic prices? We'll need more Kenyan shillings for us to get a dollar or any other foreign currency for us to be able to access the imports. So that means if guys need more Kenya shillings for them to access the dollar, for them to import the commodities and the goods and the services, when they come locally to provide that service, then the prices of those commodities will definitely rise. It will be higher because guys have sacrificed more Kenya shillings for them to get these services. So it is in the interest of the whole economy that the exchange rate remains very stable and at a lower rate. And you can see clearly that the prices of majority of the commodities have significantly gone up. And I can tell you for sure that this depreciation of the Kenya shillings has a significant impact on that. And this is the Monetary Policy Committee, and they say that it will continue to have an upward pressure on the domestic prices. And you can imagine that the Kenyan inflation towards the end of last year was around 6.8%. The Monetary Policy Committee has just said out of that 6.8, 3% is contributed to the exchange rate depreciation. So if our exchange rate was not depreciating at the rate at which it is depreciating, then inflation of the country will have been probably at around 3.8. And that's a good rate. That's a manageable rate. This Kenya shillings depreciation is a major talking point. And you can see this was in December, beginning of December, and we are now in February, and nothing has changed yet. I'll be very interested in seeing the conversations that will come out of the next meeting. The next point they noted was that the public sector external debt service has risen, thereby offsetting some of the gains made towards the government's strong fiscal consolidation. In addition, the continued weakening of the exchange rate is contributing a significant increase in the Kenya shillings value of foreign currency denominated debt. External debt in Kenya has been an issue. It has been a big conversation point. Not to talk about politics, the government has tried to say that debt management is their priority number one. But you see, debt has two components. When you borrow money externally, you are borrowing it from a foreign denominated currency. And it is in the interest of the country that the exchange rate remains stable so that when the time comes for you to repay that money, you don't sacrifice too much of your local currency. But what we're seeing is the depreciation of the Kenya shillings is causing harm to the government because now even the debt that we had borrowed initially is now increasing just because of the depreciation of the currency. We borrowed it at the rate of 139, let's say in June last year. Right now we are going to pay it at the rate of 160. This difference was not anticipated. This was not in the budget. And now the government has to do that, unfortunately. And that is one of the other reasons why the exchange rate in Kenya shillings should be giving us worries. The other point they made was the MPC therefore concluded there is need to adjust the monetary policy stance to address the pressures on the exchange rate and mitigate second round effects, including from global prices. This will ensure that inflationary expectations remain anchored while setting inflation on a firm downward path towards 5% midpoint of the target range. So they have recognized that there is a need for the monetary policy to be tightened. And what do they normally mean when they say tightening of the monetary policy? Like I told you, monetary policy just checks out the supply of money in the economy. It means reducing the amount of money in supply. More money in the economy reduces interest rates, and as such, it also affects definitely the real interest rate. And when the real interest rate is affected, investors are driven away from the economy. It means now the value of the Kenya shillings will continue going down. So tightening the MPC, tightening the monetary policy has the impact of reducing money supply in the economy, and that reduction in the money supply in the economy usually has the reverse effect of increasing the interest rates. So once the real interest rates of the country goes up and they are favorable to the investors, then definitely it will to some degree stabilize the Kenya shillings. And I think that is what the monetary policy committee will do when it comes to February. Let's wait and see, and I'll be here to give you that information and that feedback. I am sure they'll tighten just like they have said. That is what I wanted to tell you today in light of what is happening in the Kenya shillings depreciation. But just before I close this, always remember that the economy is managed by two entities. We have the government and we have the central government. The government is the leadership of the state, and the leadership of the state is responsible for something called the fiscal policies. So fiscal policies are basically the operations of the government, the revenue and the expenses of the government of Kenya. So considering the government of Kenya is the largest spender, it is the largest spender in the economy, how it spends its money has a significant impact in, of course, the economy. Because like I've said, that is how, again, it affects also the money supply. So government spending and the government revenues have a very significant impact in affecting or even influencing the monetary policy, because government is the largest spender. When it comes to now making the decisions on how much money should be in the economy, the government and the CBK must definitely work together, because if they don't work together, then the government will not know exactly how the impact of their expenses and the impact of their revenues in the economy are having an impact to something called the monetary policy, or in other words, the money supply. So that is how these two entities work together to ensure that we have a healthy economy. I hope that you have been impacted. I'll come back again with you as we continue to do this series on the financial sector, guys. For the people who are here for the first time, we are doing a review of the financial sector in Kenya. And I started with the banking sector. We have understood now how the banking sector works. We have understood the players, the different players in the banking sector. We reviewed the commercial banks. We checked into the microfinance institutions. We looked into the credit reference bureaus and all those entities that play a role in the financial sector. And we are continuing to do that by looking at some of the policies that the Central Bank of Kenya makes or takes. We are even now going deeper into trying to understand and look into what some of these specific entities, like for example, the commercial banks, what they do and what it means, what some of the decisions they take means to the economy. I want you to subscribe. You definitely will find value in this channel. And I am building an army of smart people, and I am your captain. And your captain will very, very much appreciate if you definitely subscribe and you just share this channel. It is a channel that will definitely have an impact in your life. Soon enough, you will start understanding some of these complex conversations that are happening around our country, and you are left not knowing what to say. Soon enough, you will have an opinion, because you are now getting that content right in front of your screens. Thank you very much, and I look forward to the next session with you guys.